All right. Good morning. We're going to go through pre-market this morning. I'm going to go over the instruments really quickly. I am not going to take the time to go out to the 4 hour time frame today because I've already done that, peeked out and looked. Hopefully, you do that on a regular basis. It is something you should do: the 4 hour, the 1 hour, the 15 minute. And then we go down to the um, 10, 5, or 3 to take our entries. I think most people are down on that 3 to 5. Your stop losses can be a little smaller that way. And then we're looking for that, basically that intraday trading, something we can trade, um, during Asian London and New York sessions. Okay. So we'll start with platinum. And basically, I've got a ton of stuff on platinum, but I'm going to take it off, okay, as we look at this stuff. So the day markers, as you look, is these vertical lines are Sunday, Monday. Okay, so here's Sunday's vertical line, and here's Monday's. So I know we didn't have a session yesterday, but we had one Sunday. So yesterday, platinum actually broke an outer trend line. So we had a trend line in here as it was going down. It broke through that, tested the back side, and then basically ran up and down the zone. Okay. Now, I also mentioned Sunday when we did that I would not be doing a Monday. It wasn't worth doing a Monday pre-market analysis because it was a bank holiday. So you don't expect big moves on the bank holidays. So if you shouldn't expect big moves on the holidays, your choices should be either stay out, just go do something with family, enjoy your life a little bit, because you can make up for that lost day through the week on another trade, or trade lightly, trade more consolidation, because things don't always, typically on holidays, you'll find that they're more consolidated. There's no market makers in play. None. There's none. They're on holiday. So that being in the US. So that being said, with no market makers in play, guess what? Don't expect the market to move. They're the ones that make it move, and they're out. So don't expect that move. So the odds are in your favor that you can play more range bound, more sideways movement. So take that. And if you want to trade, go ahead and just trade more back and forth action. So we had that. I know someone in the room had mentioned platinum over in here when it fell, and they had already got in. So as you can see, I have several lines on my chart. I have one here as it went up. The short play should be in your favor because it dropped over here. Okay, you're still trading with that momentum. However, no market makers. We have no idea. So you're going to trade the bounces. So the play would have been to get in here. And as I zoom in, and you'll notice I set a ton of alarms on here yesterday, watching out for price to break levels, certain levels, and I'll zoom in on those. But basically, it was to trade that range. Now I'm taking this purple range off. That was only for yesterday, only for a trade range. You'll notice I had an alarm here at the high in case it broke it during yesterday, and it did not. Okay. It pulled up and bounced at it. So the trade that I got in was over here when it broke this other trend line. That was it, and it was short lived. I was out. I didn't trade the whole rest of the day. I was too busy messing with stuff. So yes, I did not have a runner on this. I would have loved to. So basically, I posted yesterday when it looked like a plane skipping off a runway. I said, "Man, that thing's trying to take off." I don't know. I mentioned something about a plane. So it tried to take off, pop back down. Tried to take off, pop back down. That's what it looked like to me. Just or something, boat skipping across the ocean or something, hitting the wave, hitting the wave. So basically, every time it pulled short, that was in your favor. However, we have a 4 hour zone there. So if that target for you, and again, the zones are a wick area from previous where it could bounce back and forth. So that being said, it could go to the bottom of the zone, which it did. Pulled all the way to the bottom of the zone, pulled all the way back out, pulled all the way to the bottom zone, pulled back a little bit to test that midline, and then went short. So the alarms that I had on here, one was, and I know the lines aren't right to it, but one was to this line right here. And then the other I had on this price level, which looks like it moved. I had it drawn back from here. And then that one there, this outer or this other up trade line. So the reason why I had these trend lines here, you can call them trend trade, is one was without the wick over here from this point without the wick, so more aggressive. And then the other was including the wick. So I wanted to see how it respected both those, what it did on both those levels. And you'll see it broke the first one and then pulled back, okay? On that pulled back, that's where I drew that line. And I thought, well, if it breaks on that, breaks that line, this one, then it's going to go to our zone, which isn't far away. And then it has to break through the top of the zone before it goes down, obviously. So at that point where it pulled back and pushed down in here, okay, this level, well, then I was able to draw a trade line from there to there and extend it out. So that was when it pushed here. Well, then it finally pushed through the alarm, this one, and then finally pushed through the alarm. And this other up trade line, trend line, tested the top of the zone, pulled back a little, but this, we had a nice push toward the middle of the zone. Then we just had a retest of this area, this pullback. So that's why you can't pull your stops too tight. If you were in this short and you pulled, and as it pulled down here into the zone, if you just pulled your stop right here above that recent area, you'd have been stopped out only before it ran without you. Okay. So that's why you have to go back and use a high that's a little further back. Okay. So basically then it bounced off there, went to the bottom of the zone, and then kept going. So where are we looking at it from now? So that's all past. I'd have to come in and delete the stuff, delete my lines. I'd come in and delete these. They've got alarms on. I'm not going to go through and delete them all because that's going to take some time off the video. So right now, though, it is bounced to this other zone. And we also have a 4-hour trend line. That thick line is a 4-hour trend line. Okay. So we don't expect those to break that often. So as I go back down on the 5-minute chart, we don't always expect that they will break the 4-hour trend line. Okay. And that's where we're at right now. So right now it's at that 4-hour trend line. So I'm going to be watching for a bounce. However, this candle right now is through there. So here's two things to keep in mind. One, I'm down on a 5-minute time frame. I can choose to watch it on a 5-minute time frame to see if it breaks this 4-hour and this other zone, this 4-hour zone below it, and then look for a short in case it just starts to plummet. Okay, or I can wait and look for a bounce. So I can choose to do that on a smaller time frame, or I can choose to just pop back out to a 4 and just let it play out and say, I don't know that I'm going to trade platinum today because it is near a major 4-hour trend line. Okay, because again, if we go back out there to the 4-hour and pull that in, we see that is a major 4-hour uptrend line that we're at. Okay, that goes way back. All right. So if it does break that, we have a couple price areas. We have a price level back here that I would draw as a zone. We have a price level back here I would draw as a zone. Those would have to be your targets. Okay, those price points would have to be your targets. All right. So I'm not watching it right now for an entry. For an entry for me, I would want to see it go through the zone. Since I'm not in it, and if it pulls down through the zone and makes it, pulls back and tests it, or even pulls back to test the back of the 4-hour trend line. I need to see it really. I'd love to see it test that first before I think about getting in a short now. So for me, I missed my entry. I don't have a runner on. I think there's a couple people that do have runners on, or they might have been just recently stopped out. I don't know on the runners. So that's how I'm kind of looking to play. If it bounces off the zone and off this up trend line, well, then I would trade it long, and my targets my main target's going to be right here. Okay, this down trade line here, but basically my zone. Okay, and just keep in mind that the zones are price levels between basically the market makers. Prices between the market makers. All right, here's gold. Gold on a 4-hour. Gold on a 4-hour is between two zones. Okay, these are Sunday, Monday tags. I'm going to go ahead and leave those on for now, but Sunday, Monday tags is a vertical line. Basically, it's back up. It pulled back up about 8 hours ago. It had pulled back up and tested the top of the zone. So this current candle right now, we have it all the way down to the bottom already. Okay, and this one just got started. A 6 a.m. candle. So how do you like that? Nice move. And we're only half hour into the candle. So nice pull down. Where's it going? Well, I'd expect it's going down to the zone. We'll have to see. You know, it kind of tried several times. So I'm going to mark a midline for this one. And it's going to be right here. Oop, not right there. How about that? So it's going to be right there. And I would come in and just label that. That's not what I want. Wrong line for me. Sorry. I like the raid lines. So I'm going to come in and draw the raid line, and then I am going to label that as a 4-hour support resistance level because I need to be aware that's a 4-hour. Okay. And I can even look back and pull it in here. This is where a 4-hour candle stopped, and look at that level as well. But I like this one here where this red candle closed and the green candle opened. I want to be aware of that level. Yes, they peeked through. Now you can mark it there, or you could come down and mark this wick. It's totally up to you because it did wick down a little bit. And then you could say, well, I'd rather have it there in case it does wick down to that level again. Okay, so in here, down on the 5, you should be in short. That's the play on this one, okay, to be in short. And I think I got a trade on. It's just not visible. I don't know why. Oh. Ping. I put them on my phone, actually. Yeah. So there I am in gold. And I've got runners on. So right now I'm up on that. And basically, of course, I took the short here I got in kind of late. I woke up and saw that it was pulling down below that zone. And I jumped in. I'm like, okay, I'm getting in. So if we look back at Sunday to Monday's move, we did have a decent pull down. Gold's different. So, you know, a lot of times we don't know what the metals are going to do. So platinum more went sideways. Gold actually pulled down quite a bit. And on Sunday pulled back. So a nice pull down, pull back overall, and then kind of settled in. Well, then after Monday night, it you know, it had already been rounding over. You guys have heard me say it before, where they kind of round over, and then and you get lower lows, lower highs. Well, then it's turning bearish. So we had a nice bearish move to the zone, to this price level. You always have to be aware of where the previous low was, okay? Because that's it right there. And it went right to that level, that old low, kind of peaked below it a little, pulled back, nice sideways movement, and then pop back to test the zone again, and pop back to test the high of the zone. So you can always make adjustments on your zone if you want. I wouldn't draw a new zone, but we can see that it actually peaked above twice, okay? So in the future, is it going to do that? So I would be okay. I wouldn't shift my zone up like this. What I'd rather do is go find the top of the zone, and then take the top of the zone. Oop, that's my stop. Take the top of the zone and move it out. Okay, I'd rather move top of the zone up to encompass these two highs. Okay, so where's this going? Well, it's going back down to that low. It's going back to that 4-hour support and resistance level. We marked off the candle. Can it peak and pop through? It sure can, because this is a wick. So this right here on a 4-hour time frame is that wick down. Okay, so that's something that you have to look at. What are these? This over here, if I extend this line on back, remember it's drawn off 4-hour candle bodies. So this line is drawn off 4-hour candle body here. If we pull it back, this, which is on a 5-minute time frame or your 3-minute time frame, is nothing more than a wick down on the 4-hour. This is a wick down. This sideways move right here, or this pull down, pull back, is 4-hour wick. Okay, so now we're trading with the higher time frame. Okay, and that's what we want to do. So gold right now is in a move, and it's moved short. I naked eyed this. Okay, so I woke up in the morning, and when I woke up, it was about 6 o'clock or something. First thing I do, I look at my phone. So I looked at my phone and saw that gold was in here. That's where it was. Okay, 5-minute candle. Actually, it was already down here. So these are 5 minutes. So when I woke up about 6 o'clock, somewhere in there, it was right here. Well, with the naked eye, I could see, if I look to the left, I could see a bullish push up, nice, steady move, steady higher highs, higher lows, real steep pop up through the zone, pulled back down to test the bottom of the zone, and then pulled back up and made a lower high. Okay. You could wait. You could have got in there on the red candle, waited for it to pull back through the zone. And then you would draw a trade line here to here. And that should be your trade line down that you say, okay, if it stays below that, I'm thinking bearish for the day. Okay. Now a more aggressive trade line that I would put, obviously, is from here down to this high right here. And I would call that a trade line. So we have two. We have an outer and an inner trade line. Okay. So that's my inner trade line. If it stays below that and bounces off, keeps pushing, I'm going to leave my runners on. If it breaks the trade line, because right now I'm good. I already closed out partial before I came in here, and I've got 4 runners on. So I'm going to move my stop at this point right now. However, if it comes and it has trouble breaking the 4-hour support and resistance level, it could turn, okay, like it did back here. Okay, so we had a nice push down off the zone, 4-hour candle, remember, wick down, pulled back, bounced right off this 4-hour level, strong support and resistance. You get stronger support and resistance off of 4-hour candles. I can't stress that enough. So bounced sideways and then had a nice bullish push. So that's what it did in the past. It's not always 100% rocket science, but we look for past performance to become future results. So it's pulled down to the 4-hour. So again, it could turn. I have to be ready for it. So if it breaks through this inner downtrend line, I'm going to close out part of my position. I'll already have my stop moved to better and break even. And then if it moves to this outer one over here, well, then I can look to add to my position, or because it could pull clear back to the zone and give me another start. All right. So that's how it is on gold and platinum. I hope you enjoyed the session, and I'll see you in the trade room.